Good afternoon, everybody. We're taking a look at the S&P 500 index, and let us not forget one thing that here at stockmarketfunding.com and the trading community around the world, get in here, take a free 5-day trial. You want to learn how to trade options? You can see our option exchange. You can get linked up with this right away. I do know that the option on weekly and monthly and quarterlies have changed in 2016 versus 2015, 14, and that once again, things are always happening. And all of the analysis is done live here. You know, the earnings, how to pick off those options, turbo option trading. Yes, you heard what I said. Here we have Google weekly options trading. We were trading those options today, but let's get back to the S&P. And once again, when we put that bottom in here, this is a double bottom over here, and this is a daily chart. And we already have run the course. Right here is where we said that these markets were going to come down. And the white line is a daily 50-day simple moving average. Okay. We have broke clean below the 10 and the 20. And the 10 is the blue line and the red line is the 20. And here's something else is that when daily moving averages or minute period moving averages cross over, and that makes the upside movement even more weaker. There is a mathematical format that we developed with daily moving averages, weekly, minute period, 3 minute. It really doesn't matter. But I will say one thing for right now. The thing that the public looks at, because they only have one thing to look at, and I just want you guys to know one thing, that the S&P is about ready to hit what we call a daily sell signal. One thing here, I'm going to come back over here and we're going to go over the weekly chart for the S&P 500. Now, remember, we are not, day traders. We are market makers and, we go back 32 plus years. So when I call a top, people listen. And if you are a day trader, and or have a portfolio, you're going to hang on, and these markets are going lower. And the high frequency trading technology that is used, you can see right here. This is what we call the 10-week simple moving average. You can also see where the prior week there was a sell program, obviously, and we had a continuation right there as you take a look at the level. Now, I will tell you, beyond a reasonable doubt, when I say there's another 20% correction in the beginning phases, just like we did in January of 2016. One of the things that I'm going to say right here is the archive file on the S&P 500. And, when we talk about what things are going to happen, they're going to happen. And once again, when January started, we said that we were going to go down, and some equity prices actually, had 20% drop and whatnot and this and that. Just remember one thing I'm going to tell you, and you need to learn it now. High frequency trading algorithms with supercomputers move these indexes up. Not only from this bottom where they were about to crack that double bottom weekly low, hey, it was all over. But let me tell you something. We did get back to what we call a 4 week simple buy signal here. This is where the death row was. But listen, all of the retail programs and the retail trader, they struggle. And the reason why I say that, particularly in the option market, they struggle severely because before they know it, the position is ran $3 in a tip, and that within 300 to 400 milliseconds, the actual intraday trading. is manipulated. So on the S&P, I'm bringing it to everyone's attention. We called the reversal here, and we are also calling a major downturn in equities. This economy isn't well. These markets have been totally manipulated, but at the end of the day, all we care about is the price action. And that, yes, the bull got back in here, and basically the kiss goodbye was right up here. The thing about the bull side of the market, which we took, is that it was a great uh, $200 move up here, and it was a great $200 move down there. And if you add that up, that's 400 points round tick so far in this particular market cycle. And by understanding what you're going to see now, and I know every one of you people don't have a clue. You've never seen what you're going to see here. And I know you haven't because this data is not made to you. You look at it. This is called a 2060 put chart. Now, these puts were at $50 up here, and I'm just showing the weekly view of it. But we've been buying these put options down here, and this is where this side of the market's going to go. And I'm showing you again a put chart. You love to trade options, but what are you using? Your retail, you don't even know. But you know what? That's on you, pal. And the thing about it is, we're welcome to take you on here and whatnot. This is called a put chart. And when we say put charts, right now the deflated put was down here, and this is where great markets are made, and this is what we do. We bought the put options down here at $6, and we're holding them. And this is a monthly 2060 put third Friday of every month, and we own them down here, and it's a weekly put chart. And you've never seen a put chart, or when you're trading calls, you don't know what you're doing. You don't even know how it works or why it works. And I know you haven't seen it before. And that's why I'm pointing it out to you. It's because now that you do see it, whether it's on the S&P 500, and we're buying those 2060 put options, not to mention that we got into the 2080s, and this is a deflated area. So basically, for 3 weeks, the put side of this market still remains at lows, and it's totally wholesale. And we're going to go higher, and there's going to be a lot of money made on this side of the market. So when we made this bottom low, big hedge fund managers and a whole bunch of people were short these markets. And this was the biggest short cover rally ever that's ever happened in the United States. So when all the short sellers, as this was going up, all the short sellers and all the big hedge funds that have underperformed the market had to buy to cover. So you got to know what that part of the cycle was. And now that all the shorts are back out of the market, this is where we see where things will come back down. And don't take it the wrong way. We are going to have support level at these weekly moving averages. The white line and the beige line are both 50 week and 100, both the 50 week and the 100 week. And this is a white line, that's a 50 week. And let me tell you something, it's already declining in value. And the wider that this gets, the more weakness we're going to have in the S&P. Once again, stay tuned. We're here. You want to take your option trading higher? We would love to have you.